You opened your crypto portfolio today and you saw red, you are not alone. Some of the biggest names in crypto are down right now, but here's the thing most beginners don't understand: red days create opportunities. In this video, we are actually breaking down the top losing crypto coins, why they are dropping, and how smart traders are using platforms like CoinEx to position themselves before the next move. Okay, so let's get into it. So today's market is clearly in correction mode. We're actually seeing pullbacks across large caps and mid caps, and even strong projects aren't immune to this. Coins like Solana, Avalanche, Arbitrum, and Pepe have all seen interestable losses. Okay, before panic actually sets in, you have to remember that crypto doesn't move in straight lines. Correction happens because of profit taking, Bitcoin dominance shift, and liquidation and leverage positions. But the real question we want to answer is this weakness or is this opportunity? Let's quickly break down what is happening. So the first one we're looking at is Solana. After a strong rally, Solana is seeing profit taking. So when an asset actually runs aggressively, early buyers eventually lock in gains, but that doesn't necessarily mean trend is over. Second one here is Avalanche. So Avalanche has been facing resistance at key levels. When price fails to break resistance multiple times, some short traders actually step out. Okay, for the third coin experiencing loss today is Arbitrum, and layer 2 tokens actually tend to move sharply with Ethereum. So if Ethereum slows down, this ecosystem often follows pattern. The fourth coin experiencing lows now is Pepe. So when meme coins are momentum driven, when hype goes, volatility actually increases. This is where experience matters, and this is where having the right trading interface becomes very important. Here's what experienced traders do differently. They don't react emotionally. Instead, they check volume, watch liquidation data, and also study support zones and scale into positions instead of going all in. On platforms like CoinEx, you can quickly monitor 24 hours percentage losses. You can also analyze depth charts, switch between spots and futures, and set limit orders at key levels. What I personally like is a clean interface in CoinEx. It actually makes it easy to identify top losses without digging through plotters. So red days are actually easier to trade than green days because fear creates volatility and volatility creates setups. Let me say this clearly: just because a coin is down 50% doesn't mean it can't drop another 50%. So catching falling knives is dangerous. Alright, so here's a smarter approach you want to follow. Okay, first of all, you want to wait for confirmation candles. You want to use smaller position sizes, and you also want to avoid over leverage, and you always want to define validation levels. Okay, one reason many traders prefer structured exchanges like CoinEx is the ability to place stop loss and take profit orders precisely, which actually helps remove emotion from the equation. Okay, so you have to remember that the goal isn't to predict bottoms. The goal is to manage risks better than everyone else. So if you're actually curious about crypto, you should be tracking which coins are losing the most, whether volume supports drop, and where liquidity is building. So tools matter, speed matters, and information also matters. So those are the top losing crypto coins today and what the drop actually means. So don't panic, but analyze, and remember, red days actually separate emotional traders from strategic ones. So if you actually found this breakdown helpful, subscribe for daily market updates, and let me know in the comment section which coin you are watching right now, and I'll see you in the next one.